Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today, as we have promised, we will take a look at the Japanese yen. So it was really last time when long time period where we have taken a look at the last time on the Japanese yen. And actually all this time we have taken an eye on the Japanese yen, and it doesn't mean that we just abandon it and do not track the situation there. Just market, we need to get some confirmation of our thoughts, to get some really clear setups before put them into weekly research or in a daily update. So when we skip some currencies and do not prepare update for a long period on some of them, it doesn't mean that we do not watch over it. It just means that these currencies right now are not really interesting, and there are other currencies that bring better and brighter setups that is simpler and more pleasure to trade. So right now the Japanese yen setup is coming on the light, it's coming out from the shadow. And what we really have, the core of this setup stands on the monthly and weekly chart, and I give you just the brief hint. Take a look, guys. We have the head and shoulders pattern that is forming here. It would be better to look at it on the weekly chart, on the monthly. On the monthly, we have other setups. So if you would like to know the details, or also, guys, this pattern is very important. It's not just the engulfing. If you would like to know the details, it's better to read our weekly research, where we provide the step-by-step analysis of the high time frame charts that particularly they care particularly the major setup on the Japanese yen. The result of this setup is we could get significant retracement down. Currently, we will not dare to speak on some major reversal in the Japanese yen. So, but taking into consideration the scale where these patterns are forming, I mean monthly and weekly, even retracement on this on these charts, on these time frames, could bring us the context for trading within the few weeks or even for the months. Well, that's why it's very important. So now let's back to the discussion of this pattern. So guys, we have the reversal pattern here. In general, high time frames suggest that we have the bearish context is forming. On the right part of the hand shoulders, we have very typical action that we would like to see when we speak on the hand shoulders. Take a look. We have the acceleration on the slope of the right shoulder. So market's trying to continue move high, failed, market drop. Again, here another attempt to continue move higher. Let's take a look. Market was struggling again. This top is the top of the hand shoulders of the right shoulder 3 times. So it has challenged first, second, third, even fourth maybe. Drop lower, retest it again, failed, and again drop. So here we see the again bearish accelerations right back down. It means that currently, guys, probably we could try to use this setup for trading, because our major invalidation point already has been formed. And this point stands at the right of the top of the right shoulder. Although, as you know, the head and shoulders totally fails when market moves above the head. But when the market has formed the right shoulder, starting to move down, and return it back up and taken out, this is also the first bell of the failure with the head and shoulders. If this will happen, this will tell us that almost with the 100% probability, market will lead the failure of the head and shoulder to the logical end. That's why we usually our approach to trading on the head and shoulders is to be focused most on the right shoulder rather than on the head directly. It means that for us, the most important part for trading is this recent swing down. Because this is the slope of the right shoulder where market should continue to move lower. We know an invalidation point. Okay. And that's why we could use this swing down for potential trading, for taking the short position. Trend is bearish here as well, guys, as on the monthly and the weekly chart. So we have the bearish setup. Take a look, that's slightly below the market, it's 1996 area. Stands support. This is the fib level, and take a look, the weekly pivot support one on the next week. Market is not at oversold, so it means that market could start some minor bounce right from this area. And if this will happen, we could try to use it for a possible take in the short position. On the forward time frame chart, guys, here is the level that we have. First level to watch for will be 1281, so coincides with the weekly pivot point. Next level is some kind of the confluence resistance, and the lower border of this cancel coincide with the weekly pivot resistance one. So following the logic of the pivot points and how to use it in trading, market should stop somewhere at these levels, either here or here, because we know that usually pivot resistances should hold the bullish retracement within the bear trend. And if the market is really bearish, it should not significantly move above the weekly pivot resistance one. So for us, this will be some kind of the purity, the test of on the purity of this bearish setup, because if market will move higher, this will not mean that setup has failed, because our invalidation point is here. But this will bring some let's call it, put some shadow on the perspective of this setup. Let's bring uncertainty on the overall setup. If market will stop here and turn down, this will be just perfect. This is normal. But moving above this level, this will bring some nervous situation, and standing above the weekly pivot resistance one and passing for the confluence resistance on the slope of the right shoulder. This is not really good action. But this will not be the strategy. Because here, this is the most important level that we should keep an eye on. So, maybe guys, if we will get lucky here, we probably could get some kind of the brand body sell. If, for example, this action will be rather fast, the market will hit this confluence, maybe we could treat this action as the brand body sell pattern. That will increase the safety of this trade, because when you deal with the brand body, it lets you to protect your position with the break-even stop, because usually after the brand body has been formed, market shows the 618 retracement right back down. In particular, this situation lets you to move your stop to the break-even. Also, as we know, the brand body is continuation trade, and it will be quite welcome on the slope of the right shoulder. So appearing here at the brand body and our continuation, this will be just perfect. But currently, guys, we do not see definitely that this should happen. Maybe we will get it, maybe not. But whatever upward retracement will take place, this is two levels that we will take in on first, and later we will decide what to do. Because currently it will depend on the speed of this upward retracement. So it will be very fast, and probably market could move higher. If it will be very gradual, then probably this level will be acceptable for possible taking the short position. So also, guys, you can see there's some divergence that probably will be formed as soon as market will turn up. So also supports the possible retracement here. So that's the moments that we will be watching for on the Japanese yen. And also, guys, I suggest you to read our weekly research, because it really contains a lot of other important information. This will be it will just let you to get a wider view on the current situation of the Japanese yen, and it then brings more important moments. So you could look and imagine the picture in a whole, so how it looks right from the monthly chart down to the daily and then the forward chart.